Hey everybody, welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we're going to get into the technicals on the charts. Before I do that, let's just go over the biggest news breaks in the last 12 to 18 hours since yesterday's close. And what are we looking at? Basically what we're looking at, we had Nvidia earnings coming out better than expected. That stock pushing higher. That was just a little bit of a push up on the S&P futures. Then later in the evening, the futures began to rip higher when a judge ruled that the tariffs that were placed on Liberation Day were illegal and are not valid. And that, my friends, we saw the S&P ripping higher to the point where it was almost up 2% overnight. Now, what's interesting, we've actually seen a fade on the futures. We are only up about 0.75% now. So from 2% to only up 0.75% on the S&P. Why? Well, when you really dig into the tariffs, right? So Trump basically did this blanket tariff. Now, that may not be okay without Congress's approval, but he's allowed to do specific countries, specific sectors. For instance, the auto tariffs are not going away. Those are valid because they were put in under the guise of national security or other metrics. So again, the president can impose tariffs. And really what Trump could do is just say, okay, well, we're going to do this tariff on this country for this reason. We're going to do this tariff on this country for that reason. And in my opinion, that's why the futures are fading here pretty substantially as investors start to realize what this means. So take a look here, folks. This is the S&P futures. You can see, again, this was yesterday. So we kind of opened up a little bit yesterday. We faded, we went sideways, and then just before the close, we had a little sell-off as people took profits ahead of Nvidia earnings. Then Nvidia earnings came out right here after hours. The markets rallied up, and we went right here. All right, so you can see it was a pretty minimal rally on the back of the Nvidia earnings here, and then we went sideways once that was kind of factored in. Then this is where that news broke, and look at the move up on the futures. Massive move that held most of the overnight action, but look at what has happened here. A big fade to the point where, by the way, yesterday, the high yesterday at the open, this is where we opened, we pushed up right here. We are now back below that on the S&P here. So again, folks, great overnight rally. It has given back over half of the rally at this point, as we should all anticipate Trump doing his best to probably enforce these tariffs, but through other proclamations, right? Other factors, other saying, okay, we're going to do it because of this reason, which the president is allowed to do. So little things like that make a big difference. Now, if we look at the NASDAQ, this is the daily NASDAQ chart, but you can see the same sort of thing. Big rally on Nvidia earnings, then a continued rally on the tariff kind of cancellation there, and then sideways, and we faded. Notice how the fade on the NASDAQ is not as dramatic as the S&P. Now, why not? Well, because Nvidia is still up pretty sharply in the pre-market here. We can see this is the Nvidia chart, and Nvidia again is up decently. And so that's keeping the NASDAQ up a little bit more overall versus the S&P. Remember, Nvidia and the chip stocks make up a big portion of the NASDAQ 100. Therefore, they have a bigger factoring in of where it goes versus the S&P. All right, now just flipping back to the S&P here, if we flip to the daily chart, this is kind of interesting, folks. So remember, we were talking about how we were into this key resistance level, and I talked to you guys about saying, okay, well, let's really watch this kind of, 59.85 on the futures and watch to see, do we close above this level here, right? Do we get above this level? Well, overnight, we certainly did, right? We certainly were above that level, but look at how the futures have now faded. So this is the zone that I'm watching very, very closely. Again, on the S&P futures, any close above this line here, I think you go test the all-time highs. If it can't close above there, and pierces are not closes, they're not daily closes, then we have to continue to be skeptical that that market can reach that high. And just flipping over to the S&P 500 here, guys, basically your line in the sand on the S&P directly, since most of you guys probably follow the S&P, it's really right around 59.65. So a daily close above 59.65, I think you head to the all-time high and probably test that. If we can't close above that, then the markets remain vulnerable for a reversal and probably a move here, then maybe even a move down here. All right. So that gives you a rundown of what the S&P and the NASDAQ are looking like this morning, folks. I do want to flip over and just show some really interesting things on the US dollar. So let's go back to the charts here. If we flip over to the Dixie, the DXY, which is the dollar ETF, the big thing is that the bearish pattern is still intact. But look at how the dollar gapped up on the back of that news, on the tariff cancellation news. Why? Well, because again, you kill off the tariffs, and ultimately that's a stronger scenario for the US dollar. It makes it a more traditional or safe haven asset versus where all these tariffs have been imposed. You're pissing off other countries, all these other things, and they don't necessarily want to hold the US dollar, right? So it strengthens the US dollar when the tariffs were canceled off. However, as people start to realize that there are other methods that Trump can impose for putting tariffs on, look at the dollar fade to the downside. Now, listen, in the bigger picture, this is still a bearish pattern, but it's just interesting to take note of that formation, the gap up and the reversal, and how it relates to the tariff news directly. Very interesting there. Same thing kind of on the 10-year yield. The 10-year yield jumped up. Any cancellation in tariffs would be a positive for the U.S. economy as well as the global economy. Therefore, yields would go up, right? Yields would rally to the upside. And then as investors realize that, wait a minute, there could be other ways to impose tariffs, you can see the 10-year yield has come back in and basically faded. All right, let's flip over to Nvidia here and take a look. Nvidia today up about 6% on the back of earnings. Now, keep in mind, late in the day, it did sell off pretty sharply before those earnings. So again, if you factored in where it was just prior to that, it's not as big of a move, only about a $5 move from those highs. But still, we'll call it 6%. But see this trend line right up here, guys? See this level where we went up to right here and then pulled back? If you remember in yesterday's game plan, I gave you my first resistance level I was watching into earnings, this pivot top. And this trend line right here, this pinkish one right here, that is this trend line. Look at it go there and get rejected. Now, the fact that it has already hit that line on a technical daily day trading basis, I will no longer look to short that intraday. Remember, the best levels are going to be first hits of levels. Once something hammers on a level, and this is a really important concept for us all to recognize in technical analysis, when you hammer on a level more and more, the idea is that level weakens. So again, if you were to come up to a door and you need to ram that door down, let's say run into it as hard as you can, for most of us, we're going to run into it once and it's not going to break down. Once you get to the second, third, fourth, fifth, sixth, seventh, whatever it may be, the odds are it's going to eventually break down. And so when we look at the highest probability setup of a trade, that is going to be your first hit of a level that was right here, albeit in pre-market, and you could see how it worked its magic. Now, having said that, all right, so let's say I'm not going to trade this one now, but if it goes up here, would I day trade this? The answer is yes. Why? Because it would be my first hit of that level, and it would be the strongest probability of a pullback. All right, so again, basically now looking upwards of 148 or so, if it gets up there today. And again, it may not get up there, but you listen, stocks can do things that I don't even think they can do. They do that every day. So again, be aware that would be my new level to watch. Now, CRM, Salesforce, another very big company, not as big as Nvidia, but big company here. They reported earnings. The stock initially rallied up, then reversed, then floated, and look, it's now turned negative. Now, listen, from yesterday's close, it closed here at 276. It's only trading at 272. $4 on a $270 stock is too small for me to really look at as a day trade unless we see a bigger move intraday. So just keep that in mind. It's trading right here. If it were to fall substantially, there would be a level here at gap fill at around 250 or gap. Yeah, this is a gap fill as well. It's also a gap window, but it's a gap fill. And then down here at 244. But that's quite a ways away at this point. So again, first level I would be around 250 and then down to about 243.85. SentinelOne, this is a cybersecurity play. The stock is near the lows pre-market. The earnings were not great, as we see. Guidance, again, was a little troublesome as well. And you can see the rollover here. Now, if we look at the daily chart and we go to that chart, now remember, it's trading around trading around $16.70. And you can see it, the line here on the charts. There is a gap fill coming up at around 1635. Now, it's very close, but that would be a level that I will keep an eye on, maybe for a small starter position, followed by a 16 pivot low right here, this pivot low here, double bottom right there at 1595, and obviously this low right down here at around 1550. So again, this one is a possibility for a tradable low today. I'll have to monitor it very closely. Another little trend line to keep an eye on, you take this pivot low and connect it to this pivot low, and we get kind of that same $15.60 to $15.50 level, which is basically in alignment with this area here. So there's going to be a lot of support down in this range as a day trade. Would I swing trade this at the level? No. Swing trades, remember, I'm holding for days, weeks, or even a few months. That wouldn't be swing tradable, just day tradable. Swing tradable, I would need to see probably a flush down. I would say at least down to 1430, maybe even down towards the $13 level down here, where we get into more sizable support, plus it's way more oversold, right? So remember, when trading, you're doing a balancing act. You're analyzing risk versus reward. You're analyzing the technicals. How many factors do I have at this level? So listen, you could have a level that you have two factors at, but if the stock is only down 1% and it's not falling significantly, meaning it's not oversold, it's not getting punished, you don't have emotion getting out of control on the bearish side, you may want to avoid that. Likewise, if you have a 2 or 3 factor setup when the stock is already down 30, 40, 50%, now you're talking about an extreme move where the rubber band has been pulled so much that at some point you know it's going to snap back, right? And that's the key. That's what I'm looking for. I'm looking for the extended moves where people have panicked, people have acted irrationally, which gives me logically an advantage, right? I think logically, I want you guys to think logically, where we think in that manner and we look and say, okay, well, everyone else is panic selling here. It's already down X%. Now we're coming into a 3-factor support, dictating a likely bounce. And again, that's really the crux of trading, simplified to some extent, but you guys get the gist. Here's another one, Hewlett-Packard getting hammered on the day. Now, this one's already off the lows significantly. I mean, look at that. It got down to about 2260. It's trading at around 2450. So it's already almost 10% off of its lows. It would have to take this low out for me to get involved. If it does, where would that be? Double bottom at around 2130 or so. This low pivot, if it got down there, I think I would play a little ball. All right, let's go on to Bitcoin here, guys. Bitcoin continues to inch up a little bit today. And again, think about it logically, right? Bitcoin has been acting, at least recently, over the last, I would say, 1 month, with the stock market rallying. Bitcoin has rallied as well. It's been a risk-on asset. Now, again, back in April, early April, where it seemed like other countries were dumping treasuries to maybe buy Bitcoin as an alternative, it did diverge a little bit there. But overall, it's kind of gone back to a risk-on, risk-off asset. Having said that, what does that mean? Well, today we are up a little bit. Well, the stock market's up, right? So that makes sense. But don't be fooled here. Right now, you have a downward candle here, and we have an inside bar pattern developing, right? So inside bar. And as long as we stay in this sideways choppy area, this is a bearish short-term pattern that could yield a break to the downside. And then if it does that, we'll have to watch and see, how low does it go? Where does it find support? But right now, this short-term pattern is bearish on Bitcoin. What would negate it? Any daily close or really any daily violation of the 111,900 area, basically right around 112. Now, if it gets there, then we know what our level is, right? So we can get rid of this level and basically just focus on this trend line. So if it gets to and breaks this recent high here, the likelihood is it would test the 113.9, 114, we'll call it. That's that upsloping trend line, which just slowly goes up and up and up. And, what's interesting is if you go out here and we look at where this would be in June or late June. Let's go to early July. Let's go to here. you'd be at 115,000, right? So just be aware that this line is always creeping up. It seems to gain about 1,000 upside per month. So again, if we still haven't hit this level, let's say we come down like this, and in July we rally up, then that level now is 115, not 114. And you'll notice that a month ago I was talking about the 113 level, because over here it was 113. Right? 113, 112.7, and then slowly grinding to the upside. All right, let's go on to gold. Let's take a look at our metals today. Gold was down sharply initially on that news. Obviously, it was initially taken as great news because, again, a low tariff environment or no tariff environment is good economically. It's good for the stock market. It's good for growth of companies, right? Apple doesn't have to worry about, how much the tariff is going to be on its iPhone, etc. So gold initially sold off, but then look at gold coming right back up. So the market is, this is basically investors recognizing that, like I said to you guys, and you guys, listen, you're not going to hear this very many places, but again, thinking outside of the box, well, why would the markets fade? Well, Trump can figure out other ways to impose. And we all know he's not going to basically just go back and say, oh, darn, they rule these tariffs illegal, right? That's not Trump's style. I think we can all agree on that. So you got to be ready for what's going to come next. And gold is already prepping with a little bit of up move. Now we watch to see if it breaks out to the upside. Take a look at silver today. Silver is also green on the day. It's still holding this trend line here, which keeps it bullish. This is now bullish consolidation. I still remain bullish on silver. And did you guys see palladium yesterday? I said it was going to be a retrace to the scene of the crime. It retraced, pierced, and then boom, slingshot right back above. That's classic retrace there. Sometimes it just goes to the line. Sometimes in this case, it goes a little bit lower. But ultimately, as long as it doesn't confirm below, this would be a retrace and you buy it. And we're getting the bounce thus far on palladium. So pretty cool on that. And by the way, platinum, I can quickly look at platinum for you guys. Platinum's actually doing really well. You can see the breakout here, little inverse head and shoulders, right? There's your breakout and move up. Where did it go? Right to this top. And now it's consolidating. And what's interesting here is looking at the divergence of palladium versus platinum. Platinum's going sideways. Palladium had a big pullback. I still like both of them overall, but nonetheless, just interesting to see that divergence there. Quickly taking a look at oil. Oil today was up a little overnight and then just fading right back down. I tell you, oil, like you could literally have gone to sleep for 2 weeks now and you'd wake up and oil has almost not moved at all. I mean, it's really incredible. Eventually, it's going to have a big move, right? That's what it's setting up to do. The question is which direction. As long as we stay below 65 to 66 and don't confirm above this resistance level, which, by the way, goes back a long, 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 long way, then it is overall forming a bearish pattern. Although, again, it's a little concerning here in the short term because this almost looks like an inverse head and shoulders. I'm sure some of you guys see that. The only issue I raised with this, I think it was last week, is that for it to be a true inverse head and shoulders, the head must be the lowest point. And here you have a slightly lower low. And so it's kind of a weird setup here where it's like, it's almost the inverse head and shoulders, which is bullish, but at the same time, it's still probably mostly bearish here. And again, I'll just continue to monitor that. And then lastly, natural gas, which had a nice dip yesterday. Today, it's basically pausing. But again, like I said to you guys, unless nat gas really, I mean, you have resistance here, you had resistance here. So if we comes up here, that would be resistance. And then vice versa, you had, I mean, this is pretty remarkable here, but support, 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 support. And so if it comes down, you'd anticipate this being support. So you can just see it's kind of what we would call no man's land. No man's land. It's just, there's nothing to do. At least for me, there's nothing to do. No high probability setup that I can take, which is really all I care about, right? If something's like a 50-50 or even a 60-40, like, again, I always say to you guys, I'd rather go to the casino and get almost 50-50 odds at blackjack with my buddies and have drinks and just have a great time. When I'm trading stocks or I'm trading commodities, I'm not having a great, I mean, listen, it's fun to trade when you do it profitably, but I'm not here sitting with, with a drink in my hand of alcohol and just, having a good time, right? This is work. And therefore, I need those odds 70, at least according to my calculations, 70% or greater to even think about a trade. Otherwise, I'd rather go have fun at the casino with my boys, right? Or my friends. So, all right, guys, I'm going to get to the trading floor. I will see you guys all tomorrow bright and early. Thank you so much for tuning in today. And again, I always hope I bring something to the table every day. Thank you so much. Take care.